are still on this journey of demystifying what a derivatives exchange market is and why do we need it. In the last episode, we spoke about what a derivatives market is. So, Jeff, welcome back.
Thank you.
Our viewers now understand what derivatives exchange is. And some of them are already wondering, how do I participate in the derivatives exchange? What is the starting point all the way to the ending point?
Okay. So the derivatives exchange is very similar to our normal exchange that we have today. So what happens, the first thing you have to do is go and open an account with your trading member. The trading member are the investment banks and stockbrokers, as we currently have. Currently, we have 12 of them who have signed up as trading members of the derivatives market. So you'll go and open an account with them, and in that form you'll fill the
trading member.
A trading member.
A trading member.
Yeah, they're called trading members.
So who is a trading member?
A trading member is essentially a firm that is licensed to trade on shares on behalf of clients.
I see.
So just like shares, derivatives, other products that we offer.
Yeah.
That's the same community of firms that are offering access to anybody who is interested in buying contracts.
I see.
So
these are like what?
These are the stockbrokers.
The
stockbrokers, investment banks. Essentially, those are the two key ones.
Yes.
The good thing with the derivatives market, we are going even beyond the current ones. So we've got other firms who are not currently in the exchange market.
Yes.
Also keen on coming on board.
I see.
Primarily, it's our stockbrokers and our investment
bank.
Yes.
So
if you have a shares account,
how many stockbrokers do you have? Investment banks.
Today we have in more than 25
at
the moment. But the ones who have signed up to become traders on derivatives contracts are currently 12.
12. Okay, 12.
Yeah.
So we have 12 trading members.
12 trading members.
So he is buyers.
Yes.
He wants to trade in the derivatives market.
Yes.
You have 12 of them.
You have a choice of 12.
Can you give us a few names?
Yes, some examples are, so you have the FAIDA, you have Sterling Investment Bank, Sterling Capital,
nice.
African Alliance. Yeah. So your current providers of trading of shares, most of them have also opened desks to trade derivatives.
I see.
Yeah, which is a very easy thing because they understand the markets. This is their day-to-day work.
Okay.
Correct.
So I call them.
So you call them.
Yes.
You go to the offices. You're able to go and open the account. Once you open that account, they will in turn open an account for you in the banks.
I see.
So we have now another second level of what we call clearing members.
I see.
Clearing members are now banks.
I see. Commercial banks.
Commercial banks. So they have opened, they've set up a business desk or a new line for anybody who wants to trade in derivatives. Can then open, as the trading members open for you an account. So each trading member is signed up to a clearing member.
I see.
So those are banks.
Those are banks?
Yes.
And we have 41 banks?
We have 45 banks, but right now we have 2 banks that have signed up to that clearing membership.
Yes.
There's Cooperative Bank.
I see.
And there's Stanbic Bank.
Stanbic Bank.
Correct.
Okay. So the rest
are preparing. Yes. They've all carried out their projections and looking at the future of this business.
I see.
A lot of them want to be in the market.
Okay.
So we'll have close to, I think, over 10 banks keen in the very, very shortly.
Okay. Yeah. So why does a trading member need to open an account for me with a clearing member?
Because of the what's something called guaranteed settlement.
Yes.
The clearing members being very strong financial institutions. You see, it's everybody carries the risk of the other. So the trading members carries the risk for the clients. The clearing members carry the risk for the trading members. And then the clearing house is where now everybody converges. Because if something happens, the clearing member has got to guarantee settlement. The client the client's settlement has to be guaranteed.
I see.
So that flow of funds has to be guaranteed from one level to the other.
I see.
So you need a layer or a very strong institution to guarantee that settlement. And that's why clearing members are important in this structure.
I see.
So your monies go to your trading member. Trading members have an account in the clearing member's house, and the clearing member opens that account for you. So your money flows and rests with the clearing member.
I see.
And then when you decide to buy the contract, then the initial margin, so out of say 10,000 shillings, we normally say one contract costs this much. So that contract, that amount of money is then given by the clearing member to us in the clearinghouse.
The clearinghouse. The clearinghouse now is
the NSE.
the Nairobi Securities Exchange.
Yes, we have a company called NSE Clear.
I see.
That is now the clearinghouse.
I see.
And that then guarantees if once you pay the initial margin,
Yes.
that money that means you've actually bought the contract.
I see.
Okay. So out of your 10,000, not all of it is used to buy the contract. So if you're going to buy a contract, part of the money that that is paid is called an initial margin.
Yes.
This is now essentially the cost of the contract.
Yes.
But there's a certain amount that is also held by the clearing member,
Yes.
which is called a variation margin.
I see.
Because this product is where whatever you buy on a daily basis, your value changes. The clearing member holds a certain amount to ensure that when you are out of the money,
Yes.
the money moves to the other party.
I see.
So they have to hold a certain amount, say 25% of what you give them is protected to allow the movement of funds.
I see. I like the fact that you mentioned the other party,
Yes.
which means in every contract
Yes.
there are two parties.
There are two parties.
There are two parties.
Yes.
So Pius is buying
Price is buying
Safaricom
Yes.
futures
futures.
contract.
Yes. On the other side, there's somebody else selling.
There's somebody else selling.
Yes.
So Jeff is selling
Yes.
on the other side.
Correct. Yeah.
So we have our initial margin. We both
You both put in
our initial margin.
Correct. Yes.
With the trading
With the trading member,
Trading member.
who will have an account for the clearing member.
who has an account with the clearing member.
Yes, and that initial margin then comes to the clearing house.
Okay. It
So we
flows
hold
to the clearing
we hold
house.
the initial margin.
I see.
So both of you, we have your initial margins.
I see.
All right. Now, where's
So
the
you're
point-
guaranteeing
Yes,
that whoever will be in the money will receive the money,
we'll receive your money.
and whoever is out of the money
We'll receive the money.
will pay the money.
Correct.
I see.
So we hold the initial margin, and then there's a daily variation margin.
I see.
That now, depending on the value of the share of the contract,
Yes.
whoever is in the money
Yes.
gets an additional margin.
I see.
Whoever is out of money loses margin.
I see.
So there's that daily movement,
I see.
and that continues until the end of the contract.
I see.
At the end of the contract, then we're able to pay out
I see.
all the monies to the respective party.
That's a very interesting insight. Thank you, Jeff, for really breaking it down.
You're welcome.
I think for our viewers out there, so if you're interested to participate in a derivatives exchange, you've got to identify a trading member. Go to one of the 12 licensed derivatives trade members, and you'll be able to start the process and get into a contract. And hopefully, you'll be in the money. Thank you for watching.